Why are factories closing from Detroit to Manchester, from Lagos to Sao Paulo? Why do so many communities, once built on steel, cars, textiles, or electronics, now face unemployment, shrinking wages, and lost hope while stock markets hit record highs? The answer isn't just globalization or technology. A big part of the story is financialization. When making money from money became more important than making things. Since the 1980s, corporations around the world have dramatically shifted their priorities. Instead of using profits to build new factories, invest in research, or train workers for the future, most major companies have funneled their earnings into stock buybacks and dividends, rewarding shareholders and executives, but leaving little for real economic growth. This isn't just a US phenomenon. In the United States alone, S&P 500 companies spent over $6.3 trillion on stock buybacks between 2010 and 2019, according to S&P Dow Jones indices. Across the Atlantic, British giants like Rolls-Royce and BP have followed the same playbook, prioritizing shareholder payouts over long-term investment in their own industries. In South Africa, mining corporations have paid out billions in dividends to investors, even as they closed mines and laid off thousands of workers, leaving entire communities without jobs or hope. This global trend has hollowed out industrial bases, weakened local economies, and made it harder for ordinary people to find stable, well-paying work, all while enriching a small group of shareholders and executives at the top. Michael Hudson, an American Marxist economist, who is professor of economics at the University of Missouri, Kansas City, documents this in his book, Killing the Host. Instead of funding new investment and employment, corporate earnings are used to buy back shares and pay out dividends, raising stock prices and enriching insiders. This global shift toward financialization has hollowed out industrial bases in country after country, leaving lasting scars on communities and economies. Take the United Kingdom, for example, once a world leader in shipbuilding and textiles. Cities like Liverpool and Manchester have lost tens of thousands of jobs as factories closed and investment flowed instead into finance, real estate, and speculative markets. The proud industrial heartlands became symbols of decline, with generations of skilled workers left behind. In Brazil, the story is similar. Sao Paulo, once the engine of Latin America's manufacturing boom, has seen its industrial sector shrink dramatically. Major companies like Embraer and Petrobras have increasingly focused on financial engineering, buybacks, dividends, and debt restructuring, rather than expanding production or creating new jobs. The result? Fewer opportunities for workers and a growing gap between financial profits and real economic progress. Nigeria offers another stark example. Despite being one of the world's top oil producers, much of the country's oil profits are funneled to foreign shareholders and a small group of local elites. Meanwhile, domestic refineries have closed, and communities in the oil-rich Niger Delta are left to deal with poverty, pollution, and the destruction of their traditional livelihoods. This isn't just anecdotal. According to the International Labor Organization, global manufacturing employment as a share of total employment has steadily declined since the 1980s, reflecting a worldwide trend where real industry is sacrificed for short-term financial gain. Karl Marx warned in his book titled Capital that when profit is prioritized above all else, the system undermines its own productive base. He says, "The production of too many useful things results in too many useless people." Financialization is very visible in some of the world's most recognized companies. For example, in Germany, Siemens, a giant in engineering and manufacturing, spent €3 billion on share buybacks in 2018, even as it announced thousands of job cuts in its power and gas division. The company prioritized boosting its stock price and rewarding shareholders over protecting jobs or investing in new industrial capacity. A similar story played out with Tata Steel, which operates in both India and the UK. Despite posting profits, Tata Steel has closed plants and laid off workers in the UK, choosing to focus on financial restructuring and shareholder returns rather than expanding production or safeguarding employment. These real-life examples show how the drive for financial gain often comes at the direct expense of workers and the long-term health of entire industries. Richard Wolff, an American Marxist economist known for his work on economic methodology and class analysis, explains, "Financialization is capitalism eating itself. Instead of investing in the real economy, capital is recycled into speculation and asset bubbles." Socialist thinkers have long warned that when finance dominates industry, the economy becomes unstable and society more unequal. Rosa Luxemburg, in The Accumulation of Capital, wrote, "The very conditions of capitalist production lead to the destruction of its own foundation." The 2008 global financial crisis was not caused by productive investment in factories or jobs, but by reckless speculation, risky lending, and complex financial engineering on Wall Street and in major banks around the world. According to the Financial Crisis Inquiry Commission, it was this unchecked speculation, not real economic activity, that triggered the collapse. After the crisis, governments responded with massive bailouts and ultra-low interest rates, making credit cheaper than ever. But instead of using this cheap credit to rebuild industry or create new jobs, many companies worldwide used it to buy back even more stock and pay out shareholders, focusing on boosting their share prices rather than investing in real economic growth. This cycle left economies more fragile and deepened the divide between financial markets and the real lives of ordinary people. Financialization wasn't inevitable, it was a choice, made by corporate boards, enabled by government policy, and cheered on by global financial markets. If the world wants to rebuild real industry, create good jobs, and have economies that work for everyone, we must put people and production before short-term profits. Study, demand change. The future is ours to build. Organize. Resist. Be unbreakable.